Hello there and welcome to the Pipnotic Symposium for the 15th of May 2017. Before we get started, I just wanted to say that last week, the beginning of last week, I updated my email solution, so now it's not hosted where it used to be. It's been moved to Microsoft on an Exchange server, and this has resulted in some emails maybe having been lost. And I know that I receive a lot of email from members, and if I have not responded to an email that you have sent, please send it again. I will never get tired of receiving emails. So you can, if you send me an email and I don't respond, just simply resend it again. I won't get fed up at all, I promise. Okay, today we are going to just spend the entire time running through some pairs. We're going to have a look at the strength, so we have a bias, and then we are going to do some analysis on some pairs and have a quick look. First of all, before we do that, I want to show a trade that we should have been in, but we're not, and that is this Kiwi American dollar. You can see that we had this really nice area of demand down here. Where's my mouse? There it is, just down here. And we had an order in there for probably 2 months, I think, and the price came down to it, and it got within about half a pip of my entry, and yeah, and then it went north. So I can see my son walking past on the street with his kindergarten. Okay, sorry, so it almost got to my entry, but we didn't get filled in the order, so that was a bit of a blow. But price has already been up now. We're about just about a 1.2 to 1, so we would have the risk of this trade would already been out. But I'm going to leave this in because I'm expecting price to potentially come back, and we have another option at this. If, for example, we have a divergence trade setting up, then we can also give it some time for that to happen. You can actually see that we have this really nice currency strength divergence here going on. We have a low. We have a lower low in price, but the histogram is going up. So you can clearly see that we have a very keen interest in buying the Kiwi in relation to the American dollar for the relative short term. And so when you look at this here, you can see that, yeah, I mean, we have currency strength divergence, so this is no longer exclusively bearish, but you don't know if it's the Kiwi or the American dollar that is strong or weak. But what we can do is that we can have a look at the strength information here. You can see here that we have a weak dollar and a pretty neutral Kiwi. So this tells us that the reason that this pair is moving higher now, is due to a weak dollar more than it is a strong Kiwi. And so just a little bit of an insight into that, because you can't see that information on this chart. I've simply removed the lines, the currency lines, because I didn't want people to focus too much on what was strong and what was weak. We just simply need to focus on the difference between the two, which is ultimately the histogram that we can see here. So we have a really nice would-be trade that's developing nicely, and if we have a look at areas that we could consider to get out of the trade, well, we have this area here that looks potentially interesting. We had a really nice breakaway. If we draw a downward sloping trend line, we have a downward sloping trend. So we have a daily downward trend here, nice and clear. So I'm thinking if price manages to wriggle up to this area of supply, not a very pretty area of supply, but supply nonetheless, then I think that profits should be taken and risk should be removed at the moment. Now there shouldn't be any risk in this trade. The stop would have been moved to break even, but we can't do that because we're not in it. But I think that once price comes up here to this area of supply, and if it perhaps converges nicely with that downward sloping daily trend line, then we should certainly be out of the trade by the time price gets there. So but that's what we're currently looking at there. So let's have a quick look at the strength information and see what we should be doing. Okay, you can see here that we have some pretty interesting stuff here. We have a pretty strong Australian dollar, and this is the swing trade configuration. So this is a pretty longer term strength information, more profound than say the daily or the scalping configuration. But price seems to be creeping higher on the Australian dollar, and so we have to find something to pair that with. And you can see that we have We have the Japanese yen, which is looking pretty weak, so we want to be buying the Australian dollar, Japanese yen. So if we have a look at this, we go to the daily chart, you can see that price seems to be wriggling ever so gently high. You can see that we are currently battling with this area of supply, and it looks like we're probably going to tear through it. And if you have a look down here a little bit below, you can see that we have a nice area of accumulation just here that we could consider to buy at. So we identify the green candle, and then you go to the left and you say, okay, are you an accumulation candle? Yes. Yes, it is. Is the range of the body of this candle within the range of the previous? Yes, it is. And you can see this one here is not an accumulation candle. And so it kind of stops here. So this is the area of accumulation we want to target for an entry. But before we do that, because we have what appears to be a child and a parent, we want to go down to a smaller time frame and see if we can refine an entry on that. So we'll do that on the hourly chart. And here you can see that, let me turn these lines off so we have to do this work ourselves, because sometimes it can get a little bit too easy. Okay, so we have this really nice push away. This is beautiful and incredible. This is like an explosion of buying pressure. And with this high here is higher than this one here, so we have a lot of interest here. And so for buying here, I mean, you could consider a couple of things. We have, okay, let's do an analysis, and we'll start the analysis here, because here we have a fully qualified area of supply. So this area of supply is no longer valid. Why? Because it's been consumed by an area of demand. So you can see here that we had this area of demand, price rallied, accumulated, then rallied. So this one, while this one caused the break of it, this is the origin of the move. So we have a continuation pattern, we have the lower continuation pattern here. So I'm actually going to move price, sorry, the area down here like that. And this is currently still holding, which is great. It's been tested once, twice, three times, and almost a fourth time here, and price is holding. And then here on this time frame, we have this downward sloping trend line. It looks, put it like that, something like that, which is broken. So we had something down here. So we had the child, the parent is in here. We could actually even, to get a little bit more precise, we could go like that. This area broke it, and this area was where this reacted on. So let's draw this in as well. So price tested that, and it's wriggling higher. So you can see that we have a couple of areas in here. You see how this candle moved away, and the body of this candle was not within the range of the previous. The body of this candle is not in the range of the previous. So we have two areas here. We have, let me zoom in a bit so we get it nice and clear. We have from the low here to the high there, which is where price tested. And this is good because I didn't choose this as an entry because this is where price came to. I chose it because this is what the price action is telling us. We have a move away. This is not part of this. This is not part of this. This is part of this, which is part of this, which is not part of this. So these three candles here form the area of accumulation that that is where price currently reacted. So we have this one here for buy. Price rallied, we poked in here, and then we went north really aggressively. So price managed to move through this area here very forcefully. And so we could consider an area to buy just here. So we have, let's do the same series of questions. So we have the green candle, white candle. Are you an accumulation candle? Yes. Is the body of this candle within the range of the previous? Yes, 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 yes. No. So this area of demand will look like this. Like that. We'll move this line because that's gone. So we actually have this now. So this is what that looks like. So we're expecting that if price comes down here, we'll probably get a reaction. Also just above we have the big figure, maybe around, where is it? So we have the big figure just here. So price might not even come down here, but we still have the area that's interesting to us, which is down here. We could go to the 50-minute chart and refine an entry, and you can see here that then there's a lot more going on. You can actually see that this little area here, if we go to the 5 or the 1 minute even, just for fun, let it think. It's not really often on the 1 minute chart, and here you can actually see that we have some pretty interesting areas. We have this really nice area here, which is untested. This is 1 minute. We take this one and we'll box off the parent as well because it's pretty tiny. So we have that, the 8403. You can see here that down here, I mean, price was moving sideways for a while and then it managed to break off. And so we have an area, a breakaway just here. And this we left, accumulated, and then poked down to the area. So we saw the edge of the area here, which is about the 83.94 area. And then we kind of wriggling up. We have a lot of continuation patterns on the way up. On the higher time frame here, we'll go to the 5 minute chart. You can see that we have something going on here. This kind of bullish accumulation because it's kind of wriggling high when it's accumulating. And now we have this this breakout pattern, which looks like this. So ideally we want price to move away and hold above this area in accumulation. And if it doesn't, then we're going to target, or we're going to expect, a deeper retracement. I'm going to remove, actually I'm going to move this here just to see if price does come back there. We can look at that next time. So we have this, and then we have this area of daily demand here. And this is interesting because price just really cut away very forcefully. And so if we have a look how many bars of accumulation we have, 1, 2, 3, 4, 5, 6, 7, 8. We have a lot of accumulation here. So that makes me a little bit careful about taking the trade here at the 83.90 2-ish area. But due to the way that price left, I mean, the clear imbalance here is just there. So we're gonna leave that. We're gonna leave these on, and we're gonna come back to that next week, and we'll see how these this area fare. But you can see that there's a pretty strong demand for the Australian dollar in relation for the Japanese yen, and so we want to be buying this for the shorter term. Okay. Super. Let's see what else we have here. Okay, we have the Kiwi. Have the Kiwi American dollar, which the trade's already done. It's gone, left without us. Maybe we can, if we can perhaps get a trend line break, which we don't have. We have an upward sloping trend line here to here, which qualifies this as supply. But due to the fact that we have this daily demand right here and price is reacting so strongly on it, I wouldn't trade that. Also, you can see price has already been back to this level many times in the past. You can see price has actually been back to this area as high as the high of this one here. So the 69.69. So that's the cheapest you would want to sell this pair, which brings us pretty close to the base of this accumulation we could consider to sell at, which is also where we'd want to be out of this trade. So ideally we can consider a short if price manages to come up to this area of supply, which overlaps nicely with this. That said, this is not a fresh area of supply. Hey Patrick, you're the only one here today. Everyone else seems to have better things to do. Good to see you in here. So price is wriggling up. You can see we have this. We have this downward sloping trend line. A lot of trading in and around here, and so the only fresh area of supply that we have is the breakaway from here. So we have this here, and ideally, just a second. So ideally, we could. Let's go to a small time frame. We could have a closer look in here. I'm going to remove these lines, so we have to spot these things ourselves. You can see that we have some stuff going on here, but I don't like the looks of this. There's a lot of trading in and around here. But what I do like is I like this here. This is nice, just there. Because if you go to the daily chart, you can see that this is where price broke below these lows here. It's just too messy in here. This is fine. This is good, much better. And you can see that this area of 4-hour supply was the one that caused market structure to fail and break this daily trend line. So we'll go back and have a look at that. You can see we had this really nice pattern, like a sell, a rally, accumulation, then a sell-off, accumulation, sell-off. And price has not been back. So there's a lot of black space on my charts. And price is potentially wriggling higher. So we'll probably get a reaction at the lows here. Maybe around here. We'll stay at the lows. And we have the thicket of liquidity for selling up here at the 71.17 starting there, and a 50 pip stop should keep us in the good there. But what a blow that we didn't manage to get in there. That was a bit of a bummer, but they happen. It happens. Okay, let's have a look at the longer term trend here and see what's going on. What is going on? Well, you can see that we have a pretty strong downtrend on this pair, and I'm gonna have a look. I'm just gonna draw in these areas that we should be aware of. So we have high, low, high, low. So we have, here's 1 point, second point, here's the low, price move below the low. So our longer term trend line could maybe go something like that. That wasn't pretty. Let me delete those and draw that in. So we could go from this high to this high. The price is wriggling down nicely, and you can see here that we have a few things going. Price could wriggle up here. We have this pretty nice release here, but I don't like the fact that price is in here, so I'm thinking that price will wriggle up a little bit higher, maybe come to this. If we draw these areas off, we have a parent here, 72.66, and we have a child just below, like that. You see the high of this touches the bottom of the parent accumulation, then price dumps. So let's remove this one from here. We're going to put just a line here at the bottom. Okay, so now we can see that we have these areas just above us, and this is pretty important because here we have whopping weekly supply, so we're expecting price to hit this and slow down. You can see that price had a really nice breakaway from this child, and it's still untested to date, so we're expecting price to stop there before it continues low. And you can see that when you look at it a bit closer, it's not looking very pretty, but we could refine it, pretty it up a little bit, and we have this little candle here. So here we have the candle, the left. It's this is the one left. We have the accumulation as a body of this candle within the previous range of the previous. No, it is not. So these are unrelated continuation. This is a continuation pattern in here. And so we have this one here. Is a body of this candle within the range of the previous? Yes, more or less. Yes, yes, no. And so this area would look like this. So we could consider shorting at this area here, because this is where the really big break went. We had remove some of these lines. You can see that price was testing. There was like support for price here. See how price tested it, and then this one cut through it, and this sat on it, tested it and went up, test, and then price cut through it, and it's originated from this area here. So we might even get a reaction at this area of supply that caused the break of that trend line, which may be interesting. Let's have a closer look. Man, you can see this is a pretty nice push away. So from, let's maybe do something like that. So around here, here's like a really tiny area of supply, the 69.80 area, and this is one where this whole break of this area of resistance, support. Let's draw this in properly. So we have this area of demand. Come on, these little fiddly objects. Okay, so we have, it was respected once, twice, and this one sat right on it and then cut through it. So then you would take this one and you'd move it over here. We want to be selling there, which we already have our area drawn there. So that's a pretty interesting place, super tiny stop. So that might be an interesting place to sell at, but you can see that price has already been back here. It's been back to as far back as here, here, and here. This is a nice release, but but I don't like it because of that. And so I think that price, when it comes up to the 69.80 will have another push lower. So I'll keep my eye on that. I mean, look at this, what a blow. It actually, I think it was probably the spread that kept us out of this trade, just the spread alone. So that was a bit of a bummer, but that happens. How far has it moved since then? 93 pips, not so bad. Of course, that's what we have on there. What else do we have on the strength? We have the Aussie yen, we have the Aussie American dollar. So let's have a look at the Aussie American dollar. And this is the, which chart is this? Yeah, this is the kind of short term. We have the 15, we have the half an hour and the 1 hour, 4 hour, daily, and the weekly. And so ideally, I mean, I'm focusing on the bleeding edge strength, but ideally you want to focus on maybe the more long term here. But we're seeing pretty much the same thing. We have a strong Aussie, strong Kiwi. We have, I mean, longer term, we have a weak yen, and here we have a weak dollar and a weak pound as well here. But when you see this like conflicting strength, like pound is strong, weak, and neutral, then you might want to maybe not focus so much, because what we're seeing here is just like a deviation from currency strength. So this is kind of a little bit of a weird one. And I mean, if you look at like a subset of data, then you want to pull the kind of the spikes out of the data sets that don't meet the criteria of the majority of the other data. And this one kind of sticks out just here. So we have 1 and 7. So these two don't really fit. So I wouldn't be buying the pound on the daily and selling it on the 4 hour. That doesn't make much sense. So just keep that in mind. What you want to do is you want to see stuff like this, like a row of green and a row of red. So we have pretty weak dollar here, and we have strong Aussie, and we have weak Japanese yen. So if we have a look at for example, the euro, Japanese yen, and this we should be buying, and you can see pretty clearly that we should be buying it, because it's just hammering away at this tiny area of daily supply, and you can see it's probably going to manage to get through it. So ideally we could position ourselves long around here. So if we have a look at this area, you can see we have a 4 hour area here, and you can see that we have all this kind of mess in here, which I don't like, but I do like the way price cut away. So if you do take this trade, ideally, I mean, price is probably going to react here at the top, but I don't like all of this. So you might want to opt for a deeper retracement to an area that has not yet been tested, and this one here has not been tested. This is a really nice push away. We're going to have a half an hour area inside that, and we can see it right here. This is nice, very nice. Let me remove these. You can see right there, so the 122.80. Yeah, like I said, you're probably going to get a reaction here, but price has already been down to as low as this low here. It has not been here, hasn't been to the 122.80 yet. So this is a good area. And so price is currently out of balance. For this price structure to rebalance this price structure, it has to come back to the 128. And similar, so we have this price is currently out of balance, and to rebalance this price imbalance, it will have to come back to the 123.96 just here, as you can see. So that might be interesting. Also, I mean, this is pretty decent because it consumed this supply here. So we had we sell off, accumulation, sell off. We managed to move below these lows and take out this pattern, which is pretty okay. And this is the one, you see how price wriggled higher and then it popped through, consuming this. And so we can expect this area to receive some kind of reaction. We don't know the extent of it, but simply due to the fact that it managed to pop through this, it might be quite interesting to look at shorter term. So, but you can take this, but don't put it on and expect price to move for 1,000 pips. It could do, but it may very well not. Okay, back to the strength information. What else do we have? We have the Kiwi and we have the Japanese yen. So let's have a look at the Kiwi Japanese yen. And you can see that, I mean, when you trade currency strength, you're going to find yourself trading all sorts of relatively exotic pairs. But it's not going to look at the Singaporean dollar or the Mexican peso or anything like that, because those are not used when calculating the eight indexes here for the software we use. But we can see that we have a strong Kiwi, and we have a weak Japanese yen. So let's have a quick look at the Kiwi yen. And this is moving higher. You can see that price is actually wriggling pretty nicely. And price, I think price has already been back here, and it's already reacted here. This was a trade which isn't gone. Yeah, it's already tested it, so that one's gone. So what you could do is you could go to, for example, a 50-minute. You can see that price managed to test this area of demand, and now we managed to wriggle higher. We're having a pretty good release from here. I like this. So we have the parent and some tests on the parent here, like this. So the 78.20 could be an interesting area for price to have a look at. And a little bit lower down we have this, but there's a lot of trading in and around here, which I don't like. But what you can do then is you can find the area that caused the damage. So you want to find opposing areas of supply. And we have one kind of here. And this one is gone because of this in here, parent child. So that qualifies this area here as valid demand, the 78.20. So knowing that, you ask yourself again that question, what is currently driving price? Well, we have this daily demand which is currently driving price, and we are currently out of balance. This is good. You can see that price is out of balance, and so we expect price to eventually rebalance, which will bring it up to this area up here. So we're expecting price to gravitate higher. And you can see also in here we have this little area of accumulation here, which is interesting because when price left here, it managed to pop above here. So this whole price structure is standing on this area of accumulation. You go to the chart here, you can see it a little bit clearer. So this is maybe an interesting area. I don't like the way that when it left this continuation pattern, it kind of went up and then kind of didn't really hold above and away. But we're gonna remove that and we'll draw these hourly areas in. So we have this one here. We have this one here. About like that. So we have a couple of areas that we could watch. I don't like this too much simply because price didn't really manage to move away, but it did move away from here. So we'll remove this one and we'll revert to the 77.97. That's a pretty decent area, and this continuation pattern or potential continuation pattern is standing on this area of demand. So you go like this. Price manages to move up and away, then you could consider a test at the 78.28 and expect it to kind of wriggle its way up to this area of supply before it turns around, because there's no real supply until we get a little bit further up into this this price inefficiency. Let me change the configuration here so we're looking at the good stuff. Position trading. Okay, this is nice. You can see now we see the really good stuff. This is the monthly, whopping monthly, weekly, daily. So you can see the Aussie Japanese yen is still a really nice buy. So we simply want to find a way to get long here, and you can see that it's wriggling. It's trying to move higher. We do have this here, which is probably going to give us a bit of trouble. It's been tested once. But that might be a place to get out of a trade if you do manage to find a place to buy. It's going to remove all these. This is pretty pokey areas. So if we go down here, you can see that we have a lot of interesting stuff here. We do have this here, which is a little bit, we have like a child and a parent, and we have this to the upside. So I think if price manages to come back here around to the 8,400, it might be a pretty interesting area to try and buy. But ideally what we could do is we simply could box this whole area off and do something like this, like that, or remove these so we're not confusing ourselves. Like here around the 83, 85, that might be pretty interesting. Again, because we know that price is moving higher. Additionally, we have our upward sloping trend line. We have a low, high, low, and then high. Actually, this one. should go on about right here. That's not, that's ugly. We'll put it there. Like that. So this is pretty interesting. So if price comes back down there, maybe, or an area that lines up nicely with this upward sloping trend line, then we could consider to kind of jump in there. Okay, let's see. Okay, good. Patrick, can you hear me? I hope so. I think if you had any specific questions about anything you wanted to go over, because since you're the only one here today, then you can we can have a excellent, super. Do you have any specific questions about things that you wanna go over, or shall I just continue? Okay, super. I'll do that. Okay. Good. Okay, let's have a look at the strength information one more time. See what we have. What else do we have? We have the Canadian dollar is looking pretty strong, and we have the Japanese yen, which is weak. So let's have a look. Yeah, I've already marked this one off. You can see that these two, this is pretty interesting because we have a low in price, a low in price. We have a low in strength and a higher low. So this is telling us that we have a decrease in selling, selling pressure here. We had the low, and then price popped away, and we tested this area of this tiny area of supply, and now price is moving lower. So again, is it the Canadian dollar or the Japanese yen that is stronger or weakest? And if we look here, you can see that it's the Japanese yen that's weak, and the Canadian dollar, which is neutral. And this is also going to make the CAD Japanese yen move higher. So we could certainly look here for a buy. I've already eyeballed this area, as you can see. If we have a look, you can see that we had this, which has been taken out. Then you ask yourself, what area of supply did that? Now we have, I mean, this is kind of the area here. It's a little bit messy. 1, 2, 3, 4. That's okay. So we have this, which looks like that. And this is the area that broke through that. So this one's gone. And this is the one that's currently looking pretty decent. So I think there at the 82, 8300-ish area, we can maybe consider buying there. I'll leave that on. We can have a look at that next week. Actually, let me put this on my whiteboard so I know exactly what we're looking at. So we have the CAD, yen. Let's have a look at the other ones. We have the Aussie dollar. Okay, keep the eyes. We can look at those two next week. Good. You can see this one's moving away nicely from this, so we can draw in a nice continuation pattern around there. 74.25. That's pretty cool. We do have something that we might have a tough time moving through around here. There, almost there. We're about 13 pips away, so we're getting close to that. But I think it would be nice if price went up in here and then came back to either this one here or this one here, tested in anticipation it's going to keep moving higher. Again, if we look at the strength information, the Aussie dollar, American dollar, have the Aussie dollar is strong and the American dollar is pretty. You can see that it's showing some weakness, and the Australian dollar is showing a lot of quite a lot of strength. So ideally we want to position ourselves along this currency pair. You can see also if we go to, let's see if we can find some divergence here. You can see we have again divergence where we have prices moving lower and lower, but the strength information is not supporting this at all. So we are seeing a clear increase in Australian dollar strength or a decrease in American dollar strength. So if we have a look what it is, it's probably the Australian dollar that's increasing in strength in relation to the American dollar, which is why this pair is is moving higher. So that's what we have there. So assuming that we did get in around here, one of these two areas, we would want to be out when price gets like around here, so around the 7,500 area. But keep in mind that there are some, you can see these candles here showing us that there are some micro supply down the road that we might want to be careful about. We have quite a few of those actually. We have this one, have this one, and we have the one here that we're currently looking at. So these are going to probably give us a bit of trouble on our way to our target. So just make sure that the risk is removed. Okay, I can see. Okay, cool, Patrick. Just saying that I'm answering your questions as I talk. Good, good, excellent. And I remember, I apologize for this, but someone wrote me an email and they had a topic they wanted me to cover in the symposium, but I went through and looking through my emails, and I couldn't find it, and I don't remember exactly who it was. I'm thinking it was Jacko, but I couldn't find the email. So Jack, if you could resend that, that would be really good. If it was you, otherwise, if it's someone else, please send it on. Again, I've upgraded my email last week, and so I have had a difficult time finding some older emails. So please just send those off again to me, and I really appreciate that. Okay, good. So if we have you can see this is really nice. This is lovely how price is really beginning to wriggle high. And if we see what price is reacting on down here, if we go to the daily, this is the one we talked about before. We spoke about this one right here, 73.33 area. We spoke about this, these previous coaches corners and symposiums. And here we have the parent, here we have the child, and the child is a reaction to the parent. So this is not demand, this is a reaction to the demand being down here. So this is a beautiful trade. I hope some of you managed to get in it there. And you can see that we have a nice daily short opportunity right here. The indicator is drawing it nicely for us, where we could consider selling up here at the 75.25 area. That's a pretty interesting area there. And this is again that nice pattern. We have a rally, accumulation, then a sharp release lower, taking out this low and taking out this this child here, bring us back to the point of origin for this price structure. And so now this price imbalance has been balanced, and so we can expect price to continue down and maybe move down and rebalance this little price imbalance. And so we have a child and we have the parent down here. So rally, accumulation, rally, accumulation, rally, accumulation, rally, and all of these have been moved. And so the road has been cleared. And so if we short here, we can expect price to continue moving lower, keeping an eye on opposing areas of demand that are being established on the way up to this area. So we want to keep an eye on these little areas that we've marked off already here. So if we do get out, if we do get in up here at supply, just keep your eye on these when price comes down, because they are going to present some challenges when price goes down, because price can come down like that, find like a really nice area of demand like this, and just continue moving higher. So we just keep that in mind. If we have a look, what else do we have? Yeah, we have the Kiwi strong Japanese yen. We've looked at that. We have, there's nothing else that's really setting up. We have a neutral CAD and neutral CAD and a weak dollar. So we could be selling the CAD, sorry, the dollar CAD. So if we look at the dollar CAD, this should be moving low, and it is. Okay, so you can see that, I mean, I've already marked this area off. You can see if we go to the daily chart that we're reacting on this area just here. We touched it, now we're starting to move off it. It's not a very nice clean release, but we had this area of daily supply that has been established. It's been tested once, twice, which is nice. And now price seems to be wriggling lower. On the 4-hour chart, we can draw our downward sloping trend line. So from here to here, and we do have some support that's being challenged. And you can see it's just about to be broken. We have do have this here. See, we had support, we had resistance, price wriggled through it, tested it once again, and it moved through. And so this trend line has been broken. Which area of supply broke the trend line? What's this one here? So you can see that it's not a pretty one, but we do have something going on there. I think we'll have to go to the half an hour or the 50-minute to get a foothold on it. You can see it's a bit clearer here, or something like that. On the 15, maybe it's a bit clearer even. Yeah, okay. On the 50-minute, you can actually see the parent. So we have the parent, which is here, still holding. I can't even see where that is. Let's hold the line. So the 36.82, and that's holding pretty nicely, and then price is moving lower. We do have a couple of areas. We have this one here, and we have this tiny one here that are also there. And so I think that if price manages to wriggle up into here somewhere, then it would justify continuing to sell. Go to longer time frames. Yeah, I think a price poke back up into this area here would be pretty interesting. But you can see that price is having a tough time moving up through into here. It tested the lows here. And so, I mean, price is really moving low. And you can see here that we do have an opposing area like that. At the 13500 area, we could consider buying there because this is still imbalanced, out of balance. Price has not been back to this level since that move higher, and price is wriggling lower. But just keep in mind that we are reacting on not pretty supply, but I mean weekly accumulation. If we have a look at that once again, you can see that this is the first of multiple areas of accumulation, and price is just having a little reaction. I'm expecting the price to come down, test this, and continue moving higher, because if you look at oil, and it looks like there's potential for the oil to continue moving lower. Low oil prices equals low CAD prices equals strong dollar, American dollar. So yeah, we'll have to see what happens. How are we doing for time? 43. Excellent. Well, I think if there are no questions, I think that I'm going to wrap up for today, and we'll call it a day. Another look. No, things looking pretty good. You see the yen's taking a hammering at the moment, so that's nice. So sell the yen, buy the Kiwi and the Australian dollar, and then you get the carry as well. The carry trade used to be the Australian dollar, buying the Australian dollar, Japanese yen, but now I think the Kiwi has a stronger return than the Australian dollar, and so buying the Kiwi Japanese yen is also a decent carry trade as well. Good. Okay, I think I will. Okay, let's have a look before I do that. Okay, Patrick, you are saying that. Okay, Patrick's saying, I sent an email about the effects of things like commodity oil, gold, and other things which have an effect on certain pairs. You had touched on oil and the Canadian dollar before. Yes, exactly. Yeah, it's really interesting to watch. And ideally, I mean, if we go to my CAD chart, you can see that. You see here how we spoke about this as well. How price has tested this area of supply on oil. So oil prices have reached potential resistance, and so this will of course maybe make this area, oil lose value, move lower, which in turn will make the American dollar, Canadian dollar move higher. But you can see that this is pretty traded just in and around here. I mean, price is respecting the area pretty nicely, but just above that we have an area of supply which looks pretty interesting, and the 50 spot 70 area. I'm thinking if price manages to move through and touch this at roughly the same area that price on the dollar CAD comes down here, it might be an interesting buy opportunity on the dollar CAD. But we'll have to see. But I'm just loving the way that the software is bringing these areas to our attention. I mean, this area of demand here was there many days in advance before price had ever gotten there. It's just phenomenal to see how that seems to work. Cool. Okay, good. Well, I will wrap it up. Thanks for being here, Patrick, and I hope the rest of you managed to get in recording. And now my email should be working fine. So if you have any questions or have any topics you want me to cover next Monday, please send them in, and I'll be certain to get to them. Anyway, thanks again, everyone. Take care. Speak to you soon. Bye bye.